Greg, thank you so much for joining me today. Let's go ahead directly into an overview of your background on your current role.
Sure. Thanks, Milan, for having me. I appreciate it. I'm looking forward to the conversation today. My background, I won't go back to birth, but I will start kind of what was very formative for me, which was going to St. John's University in Queens, New York. I ended up meeting my wife there, but also in this context of the business, was a math major, graduated math degree, and didn't know what to do, like many people at that age, and got placed into insurance without knowing anything about insurance, other than I had to buy some for my car. I was started a company called AIG, which is a global powerhouse in the late 80s. And I've spent a few years there, transitioned to reinsurance, and then transitioned to underwriting as well. So I think of all the career moves I made, one of the biggest regrets was I didn't finish my actuarial exams. I only
Oh,
passed two and a half of them, part of 10. So things, yes, things did work out well, but I certainly narrowed my odds by not completing those exams. But transitioning to underwriting, moved to Bermuda, a company called Mid-Ocean, which XL bought a few years later. So would spend kind of from 95 to 15 years, mostly around reinsurance. And then from 2010 to roughly 2020, more insurance. And then I ended up running XL when AXA bought us in 2018. Left there in February of 20, and pandemic hit, and the opportunity to start Vantage came up in kind of late 2020, and we launched and started this company then.
in the middle of a pandemic, was that a good idea?
In the middle of a pandemic, it was part what creates the opportunity, and it was also part crazy. We had sat, Dinos Giordano and I had started having conversations, and we were quickly of the opinion that because of the catastrophe activity that had happened in kind of 2017, 2018, and then the reserve deterioration that was happening in the casualty lines from kind of 2015 to 2019. On top of that, now a pandemic of uncertain proportions, of uncertain impact to the industry, was kind of the last straw that made us have the opportunity to go out and raise the money we did from Carlisle and H&F and start a company. Yes, in the middle of the pandemic, which happy to go deeper on that, but there's certainly a very interesting time.
In a minute, I would love to hear a bit more about how did that influence the future of Vantage. But perhaps let's start with an overview of like who is Vantage, what do you write, what type of list, what lines of business do you write?
Absolutely. So Vantage is a 1.2 over now $1.2 billion equity company. Our money comes predominantly, almost all of it, from H&F and Carlisle in equal proportions. Two great private equity partners. We knew the people at both those firms for quite a while. Some of them had been invested when I started in Bermuda and Mid-Ocean. Some of them invested with Dinos when he started Arch, but a really good understanding of the dynamic at play and what it takes to build something. And we rapidly settled on, we're not going to go buy something that exists today that might be not running as well or a little bit broken and fix it up. We're going to build from scratch, which again has pros and cons, but we felt it was very strong benefit to not have legacy reserves, because those were all deteriorating in the industry. But more importantly, not to have legacy technology, which we can come back to in a little more depth in a moment. So we set out. First person I met with in those very early days of 2020 was Chris McEwen, who runs two of the three legs of our stool here at Vantage, which is reinsurance and ILS, or partnership capital, as we call it. Chris and I had been longtime friends through various number of different interconnections over the years, sometimes as a competitor, sometimes as a partner in building some stuff together at XL. And he and I first, and back to this pandemic theme, first meeting we had was the first time either one of us was meeting with somebody that wasn't an immediate family member. And so we met outside in Mystic, Connecticut, and we scratched up a description of this business. And so we took the opportunity to say, we're going to build reinsurance. So we've built a specialty reinsurance platform of about $500 million of gross written premium in 2025. Uh, think of it as some of the things it's not, which is property catastrophe reinsurance. We do that on our partnership capital platform, and it's not casualty reinsurance. So it truly is marine, aviation, energy, crop, a number of lines of business that really fit into that specialty opportunity. And we view it as it's much more about accessing those types of risks through reinsurance, which are quicker to get onto the balance sheet, quicker to develop and mature. And so we've been really focused on that part of it in reinsurance. The second piece that Chris has is Advantage, which is our partnership capital model. We started that at the very beginning of the journey, very small when we set out. It was $50 million, just to be transparent. But we felt strongly that we were going to have much more opportunity to source risk than our balance sheet could handle, and that the third-party capital model was continuing to evolve and gain traction, and that ultimately it would be a bigger and bigger part of our industry, not just in the property cat, where it is a very meaningful piece of the capital base today, but into other classes of business. That rapidly grew in 23 and 24. And we're now pleased to share we deployed $1.5 billion of capital in 2025. So a very strong support there from our investors. And it's a group that want to be very exposed to property cat and in a way that has a maximum return, but a pretty meaningful downside as well. So that's the reinsurance and the partnership capital model. And then the third leg of the stool, but the one growing the fastest for the last few years, is insurance. Alex Blanco leads that. Alex and I were colleagues for many years at Excel. He had a deep passion for analytics like I do. I was one of the first people when we were making that push at Excel to really bring, at the time we called it multivariate modeling. Today you might call it AI, into the fold of underwriting. Alex embraced it and really produced a very, very profitable business for us. And so he and I had always wanted to work together. That opportunity came up at the end of 2021 is when he joined us. And we really took off from there, building out the insurance franchise, which will be, around about $1.1 billion of gross written premium this year. Mainly longer tail lines of business. So while we don't target casualty reinsurance as a class in our reinsurance operation, it is a meaningful part of our insurance offering. So excess casualty, D&O, political risk, cyber, healthcare, all classes of we do write property insurance as well, but all classes of business that are longer tail. And that insurance franchise has continued to grow. And the top line of premium is roughly 70% insurance, 30% reinsurance. There's no hard or fast rule to that. But that is where we are headed over as we move forward in time here. And so that's what we've built Advantage: reinsurance, partnership capital, insurance.
And what is the rationale for writing longer tail in insurance versus or sounds like reinsurance is more a shorter tail, what you write, right?
We call it more medium, short and medium tail.
Yeah.
So classes, because we break the market up into short tail, medium tail, and long tail. Medium tail would be aviation, marine, as a good example, two good examples where about an airplane crashing, about a boat knocking down a bridge in Baltimore, but you don't pay the claims for quite a while. So, we haven't paid any claims on Russia, Ukraine. We haven't paid any claims on the Baltimore Bridge yet because they haven't been presented to us.
Yeah.
And so while things happened 2 or 3 years ago, they take time to actually execute. Why more of that in insurance and reinsurance? I think really 3 things. One, the dislocation that we saw in 2020 potentially appearing in the marketplace was definitely around those longer tail lines, because there was a lot of pain on the existing carriers' balance sheets as these reserves of these years deteriorated, that they started to retract from the business and gave us an opportunity to enter them. So foundationally, there was definitely a market opportunity. Second, they've continued, not so much D&O, where there's been more of a headwind on pricing, but on casualty itself, particularly where we play, which is excess casualty, the rates have the deterioration in the industry continued, and the rates have accelerated. And so we think the second piece is, and it's a really good opportunity today as well in these classes of business. And so we're leaning into the areas where we have the best opportunity. And then the third thing is, quite often we find it's a stickier business in insurance than reinsurance. And so when you can build an insurance franchise, you should try and do that, not because the reinsurance is unprofitable or not desirable. It's just the insurance business sticks with you more than reinsurance does. And so we felt that was the other reason to build in that area.
And are you, so it sounds like obviously you've grown really quickly in the last few years. Are you actively managing the different lines and potentially shrinking some of them, or are you seeing growth at this time across most of the lines?
It's very much a set of micro cycles going on in the industry. There's not one cycle of harder or softer happening here. If I break it up, short tail lines property has risen to a very strong profitability opportunity. Yes, coming off the peak pricing, but still we feel it's a very strong return available there, and we're growing in those. At the other end of the spectrum is kind of D&O and cyber insurance, where there's much more pressure on the marketplace with rates having declined meaningfully over the last couple of years, where we're growing because we're new, but it's very, very, incremental, much smaller growth rate there. And then each of the lines is a business you can walk down, and most of them fall in the category of growing because we think both rates are headed in the right direction and the profitability levels are there. But it's a mix of each business being a slightly different story depending upon where they are in their cycle.
Okay, that is really helpful. So obviously you've as you said, you've worked at AIG, Catlin, XXL, all of them very large companies. Now, I wouldn't call Vantage a startup, but you've set it up from scratch, right?
Yep.
And you've had the luxury of defining everything. So I guess first of all, let's do a comparison. Like, what are the pros and cons of a established versus a newer insurance company?
Yeah, so it's a very the wonderful thing about the areas where we participate in Advantage, almost all of them are what I would call excess of loss marketplaces, and so there's multiple carriers on a particular offering, sometimes tens and in some cases 50 or more. So it isn't a zero sum game of XYZ carrier wins the excess casualty and ADC loses. It's much more about you both participate and where you participate. And so there isn't a zero sum game here. My observation around big and small, and we like to call ourselves a young company now. That's where I'm told to call us. So no longer say startup, but a young company, because we're in year 5. So we are starting to hit our stride now. Is that on the one hand, the big company has the advantage of a very large balance sheet, able to absorb greater volatility in outcomes, and therefore able to put out larger capacity. And so that advantage is quite a strong one, particularly as you execute in the markets where we play, which is reinsurance, and then insurance, mostly for middle market and large corporate customers. On the other side, on the smaller, we're able to be very nimble. We respond very quickly because of the technology and the build that we've put together. We've got the ability to get a submission set up in under 8 minutes on average across our insurance portfolio. We're able to sit down on excess casualty and use our technology where a broker and underwriter can meet either in an office or over lunch, and we can get the whole risk submission in, underwritten and quoted right while we sit there. And so those kind of things you can do as a smaller company means you're a little more nimble and a little bit leaner. You have to do things in smaller chunks because your balance sheet isn't as big. But that, to me, is a healthy part of our marketplace. I think the markets that we operate in, our customers want to have multiple choices so they're not over exposed to any one carrier and those outcomes. So I think that neither right nor wrong. You tend to see on the larger carrier side kind of legacy technology debt. We don't have any of that over here. Everything was set up in the cloud. We're able to do a lot more here relative to larger companies because our data is very clean and we're very nimble. But likewise, there is definitely an advantage to being a larger franchise with more capital and resources at your disposal, which we are always working hard to minimize that advantage. But there's just that pull and give and take that goes on in the industry.
You mentioned two things that I found really interesting. One is, I mean, you just mentioned the lack of legacy, and also in your introduction you talked about your passion for analytics. So I was thinking, like, how have those two things come together as you've set up Vantage? Like, what is the role of analytics? Is that part of your competitive advantage or not? And how the absence of a legacy platform allow you to move faster on that?
Yeah, so we were very adamant, as I said earlier, at the beginning of Vantage, to make sure that, yes, we didn't want to buy an existing carrier because we didn't want the legacy reserves, because at that time, and continues to do so, they continue to deteriorate. We wanted also, though, more importantly, the opportunity to not have legacy technology, to not be constrained by the technology stacks that so many of the larger carriers have because they've acquired a lot of companies or they've been around for a very long time. My experience has been that those companies have the advantage of having large data sets of their own existing data, but they're in very unconnected and not integrated structures. So we came at it and we said, okay, we're going to build in the cloud. We're going to license the technology that we don't think makes a difference in the valuation advantage. Things like the ledger, the policy issuance, the claims, all the core systems that others have done a much better job of building, and that we should just license those. And then we would build with our own software engineers, with our own data scientists, with our own underwriting capability. We would build the real, we call it underwriting studio here, but the real value creation of marrying analytics and insights with our people, allowing them to make better decisions. That really was that idea of, we are strongly of the opinion that talent is the number one asset we have advantage. I know most CEOs would say that in any industry, but certainly where we traffic that excess of loss marketplace, it's a people business today. And I think for the foreseeable future, still a people business. Yes, there's technology coming that may disrupt that at some point way down the road, but we don't see that happening for the near term. So talent's our number one, but our second most important asset is our data and our technology and our ability to create analytics and deliver insights to our colleagues to make better decisions, whether that's on the underwriting side, whether it's in the claims, whether it's in the actuarial. We feel that analytical thread needs to come through, because at its core, an insurance and reinsurance company is nothing more than a data analytics company. And we don't often say that in our industry, but we should say it more. We get a submission, we analyze that submission, we perhaps enhance it with data externally, and we make a offer of a promise to pay at some future date when something cataclysmic happens, and then we fulfill that promise. And so why shouldn't data and analytics, why should you, not think of that as being, after your people, your next most important activity? So we were really driven to bring that to life, and it's the core of who we are, and it's a journey. It's a long journey. We had, when you start up new, you have nothing. So you've got to build this entire technology stack. So we have definitely been on that J curve of investing heavily to build what we've needed to build, and now reaping the rewards as we bring all these capabilities online.
And as you said, you are yourself very passionate about analytics, right? But I'm sure as a CEO, you cannot be in the details of pushing that. So I think, how have you thought about two things? One is, how do you drive that analytical mindset in the modern way of thinking about analytics, and get the right underwriting talent that appreciates that level of analytics, right? Because I mean, every CEO in the insurance company would say exactly what you said, but like very few of you actually execute on that vision, right?
Yeah, it's definitely a journey, and it's a challenging, but in the end, to me, a fun and rewarding one. You, in a young company, you have had to start out and say, I need to balance, where do I see the end state of this firm being in terms of this blend of talent and technology and data and analytics? And in the early, you've got to over index on talent, and the ability for that talent to access the market and generate submission flow. So you're definitely going with people that you've known for a while, that are well known in the market, that are recognized. We call them trusted experts. And you're upfront though at the beginning with these folks that you're here because we think you're the best at XYZ underwriting class of business. But we're here to build a tech-enabled company, and we're going to do that together, and we're going to create that together. So you've got to have folks in a young company that really want to roll up their sleeves and get going. So I needed the expertise from people that are leaders in the marketplace, but they had to be willing to roll up their sleeves and build, and they had to be willing to go on this journey together with the technology and the analytics. And to me, it's an incremental step. You don't start out by saying, all right, welcome to Vantage. Let's build our AI-driven predictive modeling tool for your class of business. You start by saying, hey, what's the technology play that we can bring to bear where we can get business in faster, worked on, and back to the broker and client faster than most. And so we start on that part of the journey. And so that doesn't involve necessarily high-end analytics, but it involves things like we've built something called an opportunity score in our excess casualty area, where we've blended for every submission that comes in. We've analyzed with data the brokers that give us the best outcomes in terms of when we quote something, do we bind it, with the underwriting intuition of, we think these industry groups are better than those, and so let's prioritize those. And so the underwriter, when they come in every morning, gets the two filtered right up to the top, where you've got the best brokers that you've been the most successful with the most desirable industry classes, right at the top of their work pile. And that's huge, because that area of the business gets 27,000 different 27,000 submissions every year. So you're not going to get through all of them. So I think that part of the journey is important, that you're trying to not just trying to jump into it all at once, that you're taking people step by step. And then as you make that successful, yes, you start to say, okay, well, we've got a submission from every excess casualty purchase over the last 12 months, rather than just storing the ones that we didn't write in some image write or data system. Let's actually scrape all that loss run. Let's marry it with exposure information from publicly available sources and build a predictive model for trucking, which is what we did next. And so you continue on that journey with the folks. That it takes time, but I strongly believe that in order to make that embedded connection of the people and the technology and the analytics trusting each other and being optimal, you got to kind of go on that journey together. And each journey is at a slightly different pace. Some will adopt it either because their business lends itself to it, i.e. they have a lot of submissions like excess casualty, or because the leadership strongly wants to get going on it. But in the end, we get everybody along the journey up to the same kind of plane. But that's a multi-year journey of 1,000 steps that I'm happy to say we're more through it than not, but still on it.
Yeah. So I guess playing that back, because I think this framework I'm fully aligned with, which is what you're doing is capturing all the data you receive from all the risks you see to really get the full universe of submissions. With that, you build the predictive models, if I heard correctly, with two main goals. One is how can you prioritize the ones that you think are the best risks and coming from the brokers that you've got the best bind ratio with. So make sure that your underwriters, given that they have constrained capacity, are focusing on the risks you really want them to buy. So you're really focused on both risk selection, but also, as you've mentioned this a few times already, speed of responsiveness to broker.
Yeah, it's definitely, for us, the technology and data analytics play. I know we tend to kind of gravitate to the ones that say, well, how do you tell the riskiness of an offering, and how do you analyze that? It's definitely what you just articulated, the operational side. There's huge advantage operationally that we can do. We feel strongly we can do more with the same number of people than the average carrier, because we've been enabled them with a technology setup that makes them more operation efficient. Yes, we're still going to go hard and regularly and frequently at the what I would call the risk analysis piece, but the operational piece shouldn't be overlooked.
And is the value of that responsiveness to broker, is it the same across insurance and your reinsurance business, or is it more valuable in the one?
It's valuable to both. for sure. The reinsurance business, because of its nature, i.e., each submission itself is a portfolio. So you're analyzing it on a much more data, actuaries will call it credibility level
And these are
in and of
these are
itself.
these are treaty. This is treaty, right?
Treaties,
Yeah.
reinsurance treaties. Yes, yes, thanks. Reinsurance treaties. Because it's each one of them can be analyzed as a portfolio, and the reinsurance industry in general has been executed. If you think of the easy example of property catastrophe reinsurance, people have been using models now for 30 plus years, and so there's more of it's part of the industry in general, analytics. So there's value there. But in terms of the building new in insurance, it's not that insurance carriers don't do it. It's just that in our area of the market, kind of that specialty insurance area of the marketplace, it's been less brought to bear than it has, say, in personal lines, in auto and homeowners, where things are very model driven these days. We see it being as a new opportunity to bring that to bear in the specialty insurance marketplace. So in terms of new, yes, it's more in insurance, but in terms of where does it impact, it impacts both the insurance and reinsurance. It's a little further along in the journey in reinsurance.
And those that mindset that you are describing, which is like, how do you bring the best underwriting talent with the analytical edge? So how have you created that collaboration within Vantage? So do you have like an analytics team that sits separately from the underwriting one? So how do you foster that collaboration?
It takes a village. And as you probably know, getting one of the biggest challenges you have in any organization is getting folks from different areas to work together in a very collaborative and productive way. I mean, I'm sure we'll cover it in a second, but the culture piece of it is huge. But we do it by saying, look, you need everybody in this boat together. You need traditional underwriters to be able to articulate what's the problem we should try to solve, and how do we solve it. You need what I would call traditional actuaries that are steeped in the pricing and analysis of P&C risk. You need claims feedback, because you're going to want, we have, because thankfully, because we're a young company, we have less of that than we would in a long established company, but you still need that capability. And then we think you need data scientists that are collaborating with those folks, and then a strong data architecture, and then a strong technology delivery mechanism. It's great to have a wonderful model, but if you can't deliver it to whoever's going to use it in the most optimal form, it doesn't get used as much. So we think it takes all those people, and each of those bringing something different to the table. And I think most importantly, in any given situation, somebody in a different group potentially driving it. Sometimes the data scientist will drive a multivariate model that's trying to do, frequency and severity for trucking exposures. Other times it's the underwriter trying to articulate riskiness in what we talked about earlier with excess casualty. And it could be the actuary, and on and on. And different folks bring different moments of time, different strengths, and can drive, but they all have to go on the journey together, right? If you don't get on that together, you're not. And it's not, the operational efficiency pieces of it have come much faster. Who doesn't want a Power BI application on their desktop like we have, where you can slice and dice your portfolio any different way? It's really on those more longer term. How do I gain a competitive advantage by bringing data and analytics to bear? Those take time, and they don't, if anybody's been around them, they don't all work on the very first version of them. They sometimes don't work at all. And so you have to accept, in part of being innovative and creative, that not having a good outcome is okay, because it's part of the journey. And then you just have to be relentless of how you keep iterating them to keep driving incremental more value through them. So it does take a large group of folks to make it happen.
Yeah, and actually, in my experience, particularly those that will require many iterations, are best received when the champion of that initiative is the actual user, right? So, like, if it's an actual, let's imagine it's a model for an underwriter, right? If it's the underwriter understanding, okay, why didn't it work on the first instance? What's the need for the iteration? What's better? There's like than if it's like an external team trying to convince
Right.
the underwriter that they should use it.
When you're young, I am fond of saying and continue to say there's way more work to do than there are people to do it here at Vantage. That's not a we're not good at what we do or we're not investing. It's just that's just the reality of a young company. You need to really and we haven't always gotten it right. I'm first to admit that. But we've learned from it and we're getting it right more and more often now is you need that strong champion that yes is the underwriter sometimes, but I would say also the actuaries and the data scientists in certain lenses have that same need to champion because they're trying to bring someone along in a different way to a different outcome that isn't always obvious by trying to play forward what you've done for the last 10 or 20 years. So it's the blending of it that makes it work. But yes, you do need a champion, and without the champion, you kind of get stuck in neutral.
So let's jump in. You mentioned culture, and you've touched already on a couple of angles of culture. But I think again, one of the benefits of starting what you call the young company now is having the luxury of creating a culture from scratch. So I guess two questions on that is, what do you think makes it special, but also like how did you think about the culture as you were setting up Vantage?
Yeah, we were in the reality of coming together as a leadership team in the middle of a pandemic, including ourselves not even being able to meet live until well into 2021. And so you just gotta be every leadership team has to be incredibly disciplined about culture. And it's a never ending journey. It doesn't just get done once and then you move on. But I think the stakes get amplified when you do something in what I would call a modern company, which is some kind of hybrid blend of people going to an office. I happen to be in our Norwalk, Connecticut office today, but many people also working remotely. And I think we thought about it in the sense of, well, what do we want to cause to have happen here? I've talked a lot about the analytics and data. I won't, so that's definitely a lens of our culture, as you can probably tell. But I would say collaboration, which I touched on just a moment ago, huge in any organization, really big when your 360 colleagues are scattered across Bermuda and something on the order now of 35 or so different states, because you have to go. You can't assume it'll happen in the hallways or in the coffee room or the lunchroom or wherever. You have to make it happen, and so collaboration is a very big part of our culture. Transparency is another one, because of that same disjointed information flow. You've got to really put some mechanisms in to make sure you're being as transparent as you can be. So we use a Monday all hands call, which all the hands meaning every colleague, all 360 are invited every Monday at 2 o'clock New York time to join a call where, yes, there's an update from me. There's some updates from some of the business leaders, but it's also an open agenda for folks to raise whatever they would like to talk about. And so that transparency is another big part of it. And I think to me, you need to make a difference in the industry you work in with your brokers and clients who we've been so fortunate to have so much support from in these first 5 years, but also in your communities and how you give back. And so we definitely felt that's a strong piece of Vantage, even in our early days. And yes, maybe more in the time we give than the funds we give, but we've really rallied around a lot of our efforts around education and making sure we're bringing a new stream of candidates into the industry that have a wide range of diverse backgrounds and outcomes that maybe not had the opportunity to be exposed to this industry in previous generations. So we put a lot of our effort around that.
And then you've talked about this Monday 2 p.m. all hands meeting. So do you actually bring the full team together at all, or do you somehow support pockets of the business getting together, or are you like are most teams working completely remotely?
Yeah, so we have I call it a multi-layer approach to this. There's the virtual Monday, everyone invited call, which now at 360 people is, you may not have 360 people all interacting, but it allows everyone to hear the same message and to ask questions as people do and to talk about other topics. We also have a Friday, we call it Vantage Connect, You opt in and your name gets randomly matched with another Vantage colleague, and you have a 15-20 minute coffee meeting on Friday morning. That's, to us, another way to get folks connected. Then you have to go back. That works, and remains a necessity for the fact that we're so spread. But now you sort of layer it up. Well, okay, the teams that underwrite together in the same businesses, and the teams that pay claims together and so forth, legal, they need to be coming together at regular intervals. And so we don't dictate what that interval is. Some teams happen to be lucky that are, for instance, in reinsurance, it's all in Bermuda. So they go to the office every day, they see each other every day. Other teams, maybe our construction business in the US has leadership in New Jersey and Florida and Texas. And so they have to be more disciplined around, they need to get together every 3 months or so to make sure. And then when you're working on a project, you need to come together because you need to get people in a room to set up what you observed earlier about a champion. Well, you not only do you need a champion, but you need a work plan and milestones and measures of success. And you need to have that happen in a room together as opposed to up and down the screen. So I think it's that, the right set of outcomes to bring people together to make the business hum is what we do. As a leadership team, we're together once a month for a couple of days. And we're obviously having regular calls throughout the other weeks. I think the last piece of it is about every 18 months, we'll get the entire firm together. So in March, we'll be doing that with what should be at the time about 380 or 390 people.
Where are you going, Greg?
We're going to Miami. The choice of location is, in my mind, always a little bounded. 50 of the 360 of us are in Bermuda. So we want to have somewhere where you can get to from Bermuda with one flight easily. And likewise, you want to have a major airport so all the different folks around the US can get to it with one flight as well. So you kind of end up in the New York, Washington, Atlanta, Miami type area.
Maybe it's quite interesting how all of us, obviously, Cytora is also remote first, and our teams are quite distributed. And I think we've all refined like how do we enable that collaboration, and we all pretty much all of us get to the same conclusion. So you mentioned this Monday meeting and this Friday Vantage Connect, I think you called it, right? Yep. We would do it. Actually, we do almost the exact same version of that. We combine actually the two. So what we do is we've got a Friday, we call it a town hall, but the first 15 minutes of the town hall, we create random breakouts where you get placed into a breakout with another 4 random people. And exactly, I mean, the same concept is how do you create the serendipity of a coffee machine in a virtual environment, right? So I just thought it's quite interesting. So perhaps
it's great. No, it's great to hear because you're doing this and you're after the business planning and the core activity of underwriting and paying claims, all that. I spend the most time on this idea of how do you stay connected as a hybrid firm as best you can. I love hearing, in fact, that it actually works beyond Vantage. So I appreciate you sharing that.
Yeah, I think we all learn from each other. Perhaps one last question, which is really it's 2 of them, which is like, would be great to get a sense of what are your views of where the market is today, but as importantly, how are you thinking about the future of Vantage in the current context of the market?
Yeah. Oh, absolutely. The market is where I have felt we've been for the last decade or so, which is, it's not a market. There's a number of markets no longer operating in one large cycle. If you go back to the 80s or 90s, maybe even the 2000s, it's a hard market or a soft market, and everyone kind of rides that up and down. There are markets that we think are quite strong, and we talked about that, excess casualty. I think property, while coming off, is still at a very high level. And there's other markets like I touched on, D&O and cyber, where I don't think they're unprofitable. I just think the rates have come off to such a point that the opportunities are very limited. And so, and then everything in between, right? There's a whole spectrum of each of one of these classes of business that we're in, operating in that kind of in some kind of environment, which I think we believe strongly over what we do. that the overall portfolio is getting rate above trend across the piece. So there's a good opportunity there. So you look at that and you decide how to deploy your pieces. The way we do it is we think building a diversified portfolio like we have helps us be growing faster in one and slower in another, and even shrinking in some cases, because we've got that spread of business that lets us navigate through it. Where the market's headed, that's mostly dictated by supply and demand. And again, in each of those markets, you're seeing, well, why is property rates coming off? Because for a while, demand exceeded supply by quite a meaningful margin. It's probably at about equilibrium now, and it's not, supply slightly exceeding demand. But also, it's the perception of risk. In the end, we we sell a product that most people don't want to buy. If you think about it as an individual, you don't wake up in the morning saying, geez, I want to go buy my homeowners or my auto insurance today. You do it because of some forcing mechanism. The same thing is true of in humans, which, as I said all through this, people are the most important part of this business where we operate. Humans don't want to deal with the downside of things. And so you're working in an environment where you're trying to create solutions to things that people don't want to do. What's happening to the general level of riskiness in the world? It's increasing, and it has been since way before we started. But when we started in kind of a very unique moment, we felt there was a high degree of riskiness in the world. If anything, I would submit, yes, we've learned to live with COVID. I'm always amazed that in fact, just the other day, I had someone cancel on a dinner because they had gotten COVID. But we learned to live with it now. But so many other things, geopolitically, social inflation, real inflation, have all accelerated, and that riskiness drives the need for more protection. And so we think underneath all these individual cycles of the marketplace, the overall riskiness of the world is going up, and then that will drive continued demand. And no, I'm not calling for a 100-year hard market, but I am saying you'll see less of these big troughs and peaks that we have seen historically in this industry, because I think we're starting to find a way to provide supply. And that's where Vantage comes in, is we feel strongly that in our pockets of areas that we've chosen to compete, that we bring some supply of risk protection that is needed by our brokers and customers.
And as you said, if the overall riskiness of the world is going up, and combined with you being able to be nimble given your size, that gives you the perfect opportunity to identify, like, where do you want to grow, right?
Yeah. And we have, we operate where we operate, the markets today that we have, we're scratching the surface of where we can. We write, as I said, predominantly excess of loss on the insurance side. Can we go down and get down those towers into the primary and become a viable option in some classes of business as a primary writer? In reinsurance, we definitely are very happy with the areas we take on. We also do a lot of what I call our innovation in our reinsurance operation. Well, they'll take on new exposures, some that went very well for us, film and TV cancellation due to COVID, and some like intellectual property, and that might have been a little more challenging. But we view reinsurance as a really great way for us to get involved with insurtech, with emerging risk opportunities in a measured, disciplined way that's appropriate to our balance sheet. And so we use reinsurance for that. Again, these are not mutually exclusive. Our insurance people will sometimes innovate, and our reinsurance people will sometimes grow into our existing opportunities. But I think that balance is a strong one.
Yeah. So we should expect Vantage keeping on growing at a similar rate for the next few years, sounds like.
Certainly to maintain a healthy rate of growth over the foreseeable future. Yes.
Fantastic, Greg. I mean, really looking forward to, well, first of all, really pleased to see the kind of the growth you've achieved in the last 5 years, and kind of the excellence in your operation, but also looking forward to seeing further growth in the next few years, as you said, capturing some of the increased riskness in the world. Thank you so much for joining me today, Greg.
Really appreciate you having me. Enjoyed the conversation.